Welcome students for a class on standard costing. So this is a repeating subject which comes in CMA intermediate, then again in management accounting paper 12 and strategic cost. So this is such a topic you learn once properly and you can use it many times. So let us start to understand the fundamentals. What is a standard costing? Typically what happens in an organization, a production concern, they want to compare their actuals with some reference. For this same purpose, they create some reference values which are called as standards. If I have to give you some daily example, let's say you go for a medical checkup, they check your blood pressure. So they say it is 90 by 140. So now whether this is okay or not okay, how do you find out? This is found by comparing it to a standard value of 80 by 120. Similarly, in organizations, what happens? You have certain inputs, then there is a production, then there is output. So this output, and they want to compare it with input and say whether everything is going okay or not okay. If these are okay, then no problem. But if it is not going okay, then what they can do it. So those analysis is done at standard costing module. So it's a technique used for planning, decision making and control. This is some theory. What are standard costs? They are predetermined costs, means the standard values. For example, the raw material required to produce 1 unit of product. So that is, let's say 10 kg. So this is a standard. Similarly, in terms of labor, there will be 10 hour. In terms of overhead, as a machine hour, it can be 15 machine hour or 10 labor hour. So these are all predetermined values which are used to compare the actual. How it is compared? It is compared through variance analysis. So variance is nothing but the difference between standard and actual. And if the difference is positive, it's called as a favorable variance. And if it is negative, it's called as adverse variance. Once there is an adverse variance, the planning department, they will dig deeper and find out what is the reason for this. So all these are important when you go and start working in an organization. You should know what is standard costing, what are the standard values. From examination point of view, let's dip deeper into your syllabus. So basically there can be 3 types of variance. In fact, there can be more variance. So in your syllabus so far, it is material, labor and overhead. Other than that, there can be profit, there can be sales. So all these variances also can come. So from examination of point of view, material cost variance, labor cost variance are important. We will go very slowly. We'll understand how to solve these problems. Many people give up standard costing thinking it is very difficult. But the moment you understand the basics behind it, it is very easy subject. Of course, you have to remember certain formulas, but I will teach you techniques how to remember them. So let us go into material cost variance. It is nothing but the variance is in material. So material can have 2 variables. One is how much material is required, that is the quantity. Second is at what price the material was purchased, so that is the price variance. So all variances, I will call it as material cost variance, means this is the overall variance due to material. They are broadly classified into 2. One is material price variance and the second one is material usage variance. So price variance comes with respect to purchase price and usage variance arises because of usage or quantity. If there is only one material, so this is all your standard costing with respect to material cost. But if there are combination of material, let's say for production you need more than one material. So in such cases, 2 additional variances also arise. They are material yield variance and material mix variance. We will solve a simple problem to understand what it is. So let's take this simple problem. So pause for a moment and read the question. The following data are available for a product. Standard material cost per unit output is 2 kg at 10 per kg. Here you should start recording the data. So 10 per kg standard. So this I will call it as standard rate or SR is equal to 10. During the period, actual details are as under. Material at the beginning of the period. So this is opening WIP. Then material purchased during the period 10,000 kg at 12.5. So this 12.5 is my actual rate, or I will call it as AR. or actual price. This is standard price, this is actual price. This is equal to 12.5. So material used is 11,000 kg. So this is actual quantity. Then actual output is 5,000 units. So I need this information. Why? To calculate standard quantity for actual output. Standard quantity for actual output. So 5,000 units are produced. If I had followed my standard, according to my standard, per unit there are 2 kg of material required. So that is given here. If there was no variance, if I was producing as per standard, I would have required 5,000 units into 2, 10,000 kg. Now I have 4 details which are required. Standard price, standard quantity, actual quantity. With this, I have to calculate material price variance, material usage variance and material cost variance. What is material price variance? The variance is because of price. MPV, here what is they are asking? Price. So that means I have to compare the difference. SP minus AP. This gives me variance because of price multiplied by actual quantity. Understood? So what is my standard price? 10. What is my actual price? 12.5. And what is my actual quantity? 11,000. 10 minus 12.5 is to minus 2.5 into 11,000. So 27,500. Since it is in minus, I call it as adverse. This is equal to minus 27,500 adverse. Means this is not helping the organization. Second variance they have asked is material usage variance. Here the variance is because of usage. How much material was used for production. Usage relates to quantity. So my variance will be because of standard quantity minus actual quantity multiplied by standard price. This is equal to, so SQ 10,000 minus AQ 11,000. What is the standard price? 10. So this will be minus 1,000 into 10,000. So minus 10,000. Again, since this is minus, this is an adverse. Now next is material cost variance. Material cost variance is nothing but addition of these two. So my material cost variance is minus 37,500. If you have to use formula to calculate material cost variance, this is nothing but standard cost minus actual cost. How do you find standard cost? Standard price into standard quantity minus actual price into actual quantity. So standard price is 10, standard quantity is 10,000. Actual price is 12.5, actual quantity is 11,000. When you do this also, you will get 37,500. So this was a simple problem to understand what are the costs for the variance, whether it is usage, means quantity, or whether it is price. Now that was one material problem. Let's say you have two types of material. Input, you have two types of material. How to solve that kind of problem? Let's pause for a moment and understand what is the problem. The standard quantity and standard price of raw material required for 1 unit of product A is given. So this is unit. Okay, this is unit quantity and unit price. So this is in kg, this is in rupees. The actual production and relevant data are as follows. So at the end of the production, they measured what was the actual. Material A 1650 was consumed, material B 2450 was consumed, and this was the actual total price. Calculate variances. When they ask calculate variances, you have to calculate 5 variances. So already you have learned how to calculate 3. Even if you calculate that, you will get about 5 marks. So this will be a 7-mark question. But if you learn the next 2 variances, which are yield and efficiency variances or mix variance, then you will get the full mark. And this is very easy. Actual production was 500 unit. So what you should do first you should calculate using a table. So the table goes like this. So you have material A and material B, SQ, SP, AQ, AP. So let us start filling this table. Whatever data is straightforward. Material A, SP is there. Material B, SP is there. So that I will write first. 4 and 6. Next, what do I need? SQ I need. Here they have given per unit. But I have to calculate for 500 unit. So 500 into 3, 1500. 500 into 5, 2500. So standard data, it is done. Next I have to calculate actual data. Actual quantity. Actual quantity, is it given? Yes, straightforward. 1650 and 2450. Actual price, is it given? No, this is the total price. So I need per unit price. So I calculate per unit price. 5410 divided by 1650. So this is 3.28. Next, 13,960 divided by 2450. So 5.697 or 5.7. I'll take it as 5.7. So now first step, the table is ready. Next step, what I have to do, I have to calculate the combination table. This is important. What I am teaching you is easy to remember and easy to reproduce in the examination. So what you should need, first you take these two factors, SQ, SP. So I'll write for A and for B. First I write SQ, SP. So I call it as 1. Next I take this. I call it as AQ, AP. So I'll write it at the other end. AQ, AP. So this is my fourth. I'll write it as 4. Because intermediate I have 2 more factors. Next, what other combination I can make? I can make these two, correct? So this is AQSP. So I'll write it as AQSP. So this is my third combination. So the fourth combination is revised standard quantity. So here you have 4 variables. I have to calculate the 5th variable, which is called as revised standard quantity. To simply understand in a theory, so I should have used SQ and AQ, SQ of A and B in 1.5:2.5 ratio. Okay, but I have used it in a different mix. I don't know what mix I have used. But suppose whatever actual, if I had used it in a standard ratio, what is that value? That is revised standard quantity. To calculate that, I should have total of these two. So this is 4,000, 1,650 plus 2450, 4,100. So now I have total of standard quantity and actual quantity. What is RSQ? It is basically, my total was 4,100. Suppose this total was divided in the standard ratio. What is that value? So RSQ of A will be what? 4,100. I am apportioning on the basis of standard quantity. So for A, it will be 1,500 by 4,000. And for B, it will be same thing, but 2,500 divided by 4,000. So I'll calculate these values. So 4,100 into 1,500 divided by 4,000, 1537.5. Then 4,100 into 2,500 divided by 4,000, 2562.5. 2562.5. This total should match with actual quantity. What we are doing? We are just adjusting the ratio, that's all. Now I have my 5th factor. So I will multiply this with standard price. So this is my 2nd factor in the table. So this is RSQ into SP. So once this table is ready, what I will do? I will start multiplying each quantities. So SQSP will be 1,500 into 4, 6,000, 2,500 into 6 is 15,000, then total is 21,000. Like this, I will calculate the entire table. I have calculated all the factors and I have taken a total of them. So this was the 2nd step. 3rd step is very easy. So first, what you have to calculate? Material cost variance. This is nothing but 1 minus 4. So 21,000 minus 19,370. So this is 1630. Since this is a positive value, we call it as a favorable variance. So this is material cost variance. Next comes material price variance. So 3 minus 4. 3 minus 4. Why I am saying 3 minus 4? What is the factor 3? It is called AQ into SP minus AQ into AP. So what did we learn in the previous example? The price variance is because of change in price. So if I simplify this, this is AQ into SP minus AP. It is giving me same result. So this will be 21,300 minus 19,370. So this is 1930. Since this is positive, this is also favorable. Next major variance is material usage variance. Material usage variance is given by 1 minus 3. So 1 minus 3. Let us check this formula. What is 1? SQSP. And what is 3? AQSP. So I take SP which is common. Then I am left with SQ minus AQ. So the variance is because of quantity which corresponds to usage. 2100 minus 21300. So this is minus 300, means this is adverse. So here you can check whether if I add MPV and MUV, am I getting MCV? MCV is the total cost variance and subvariances are price and usage. That means when I add price and usage, I should get my cost variance. So 1930 plus of minus 300, I will get 1630. So these values are correct. Under MUV, usage variance, I have two subvariances. These are coming because of mixes. So I have material yield variance and material mix variance. Material yield variance is given by 1 minus 2 and material mix variance is given by 2 minus 3. So what is 1? 2100 and 2 is 21525 and this is a negative 525. So means this is adverse. 2 minus 3 is 21525 minus 21300. 21300. This is equal to 225. So this is favorable. Again, when I add these two, I am getting minus 300, which should be equal to material usage variance. So these two are also correct. So this is the shortcut method. But when you are using this shortcut method, what I suggest, you write these equations. So that will definitely give you marks. So we will see one of the past examination question. This is how you will get your questions. The standard mix to produce 1 unit of R is as under. So you have 3 materials here. The procedure is same. There is no change. So instead of 2 rows, you will have 3 rows. So material XYZ, this is per 1 unit and this is the standard price. So this is standard quantity, this is standard price. During the month of June 23, 10 units of product R were actually produced and consumption was as under. So they have again given XYZ. What is this? This is actual quantity. This is actual price. First step, what you have to do, prepare your table. SQ, SP, AQ, AP, and since this is a mixed problem, I will have RSQ also. Here I need 3 material. So SQ is given per unit. I should convert it into actual output. So I have to multiply everything by 10. So that will be 10 into 3, 30, 40 and 50. So 30, 40 and 50. Standard price is directly given 300, 500 and 400. Actual quantity is 32, 47.5, 43.5 and actual price is 350, 550 and 360. So once I have all of this data, what next I should do? I should total SQ and AQ and I should find out RSQ. So 30, 40, 50 is 120. So 32, I will get 123. Now this 123, I should spread it in standard ratio. So how do I do it? I will show for 1. So balance 2 you calculate. RSQ of A, I should take this and multiply this with in this ratio. So 30 divided by 120. So I will get 123 divided by 4. So this will be 30.75. Now I ask you to calculate RSQ for Y and Z. So now I have calculated RSQ for Y and Z also. This was the first step. What is the second step? You prepare the factors table. So first one is SQSP, last one is AQAP. How do you do this? SQSP, AQAP, AQSP, then RSQSP. So here you were saying, sir, this is confusing. How do I remember? Simple. Except for the last one, always the price is compared to standard only. So you know, first one is SQSP, last one is AQAP. Then remaining, I know it is SP only. So it has to be RSQ and AQ. So this is how you remember this. Now SQSP, you calculate 30 into 300. So 9000. Like this, you calculate and total this table. So now I have computed. This is my table. So what is material cost variance? 1 minus 4. What is material price variance? 3 minus 4. And material usage variance? 1 minus 2, and material yield variance 1 minus 2, and material mix variance is 2 minus 3. With this you will get 5 values. So calculate that. This is the method. But you will understand this is from the examination point of view. But you should also know what is the significance of all of this. Let's say I get adverse or favorable, something like this. If my adversity, where is it? Is it because of usage variance? Material usage variance. Let's say this is adverse. What is the meaning of this? That means there is some problem in production because usage is handled by production. Then I will go and check in the production for one quantity of output how much input you are using. Why you are using more? What is the reason? Is there a quality issue? So all this can be found out whether I know whether it's adverse or favorable. Similarly, if material price was adverse, so I will go to purchase department because purchase department is responsible for procuring material at a right price. So why am I paying more? Is it because of a new supplier or is it because of general inflation? So all this further information I will come to know by standard costing. So I have solved 3 problems. If it is a material cost variance, it is a very simple. You should do it in 3 steps. You can either follow this table method or you have to remember all 5 formulas. But there is a logic. If it is price, it is because of the price, standard and actual price. If it is because of quantity, then it is material usage variance. Hope this was useful. So we will see again with another standard costing module on labor cost variance.